Welcome back to The Deep Dive. Today we're digging into something pretty unusual, how a political fight in Washington, D.C. basically, switched off progress on the future of finance tech globally. It really highlights a kind of systemic vulnerability, doesn't it? I mean, picture the whole U.S. federal government, the core of the world's biggest economy, just grinding to a halt, all because politicians couldn't agree on essentially the budget. That's what a government shutdown is.
Exactly. And for this deep dive, our mission is really zeroing in on the longest shutdown in U.S. history. We're talking 43 days, a marathon freeze. And we want to trace its specific, almost strange impact straight into the world of digital asset regulation.
Right. We're looking at sources that tracked this bizarre chain reaction. You had political drama over healthcare funding in D.C. suddenly stopping the approval process for things like Spot Bitcoin ETFs and putting the brakes on laws for stablecoins, those digital dollars. It's kind of shocking, really. Shows how interconnected everything is.
It really does. And before we even get to the financial side, you have to grasp just how big this political freeze was.
Yeah.
Like you said, 43 days. That's not a small blip. It was the longest shutdown ever, and it was really rooted in a major political clash centered around President Trump at that time.
And the core issue, the biggest sticking point, it wasn't even initially about finance, was it? It was healthcare. That seems to be the irony here.
That's right. Democrats were pushing hard for more funding, more support for certain healthcare programs. They saw it as absolutely essential before any bigger budget deal could happen.
Okay, so they were drawing a line in the sand there.
Meanwhile, the Republican stance was more about, let's say, political sequencing. They wanted to push that huge healthcare debate off until after they'd secured the main government funding bill.
Deferring the tricky part.
Exactly. And that fundamental disagreement, refusing to tackle these issues separately, just created this total logjam. The government literally ran out of approved funding and had to, shut down large parts of its operations.
So after 6 weeks of this paralysis, how did it finally get resolved? Was it some grand compromise?
Not really, no. Our sources suggest it was much more like a temporary truce than a big victory for either side. President Trump signed the bill just hours after the House passed it, which followed the Senate approving it earlier.
Truce. Okay. So what did that bill actually do?
Well, and this is key. It only provided temporary funding, very short term. One source called it like a small oxygen tank, just enough to keep things running until January 30th.
So not a long-term solution at all?
No, the main goal was simply buying time. Time for both parties to try and negotiate a much bigger multi-year funding deal, something stretching out potentially to 2026. They fixed the immediate fire to clear the decks for the much larger battle ahead.
Right, and I remember President Trump made some kind of statement when he signed it, trying to smooth things over.
Yeah, sort of a symbolic gesture. He said something like, "I'm always willing to work with anyone, including the opposition party," and specifically mentioned healthcare, the thing that caused the freeze, saying, "We will work on an issue related to healthcare. We can do much better." But, the shutdown had already happened. The impact was there.
Okay, so let's pivot. Let's talk about what this means for you, the listener, maybe someone holding digital assets or interested in crypto. This DC chaos didn't just affect, like, national parks or TSA lines, did it? When that government engine stopped,
It instantly froze the key financial regulators, the ones who essentially act as gatekeepers for digital assets entering the mainstream financial world.
the gatekeepers. Who are we talking about specifically?
We usually call them the big three: the Securities and Exchange Commission, that's the SEC, the Commodity Futures Trading Commission, the CFTC, and of course the U.S. Treasury Department. When they had to send non-essential staff home, basically all major regulatory work on crypto just stopped.
Everything went dark. And that raises a really interesting point the sources don't fully spell out. If they lost 43 days of work, does that create a permanent backlog? Like, are projects now delayed for months, maybe a year? Or can they just kind of catch up quickly?
That's a great question. It suggests this systemic risk, right? A political fight over something totally unrelated can throw a wrench into financial innovation timelines.
And you see that vulnerability really clearly with the SEC, don't you?
Yeah.
Especially regarding those Bitcoin ETFs everyone's been talking about for years.
Absolutely. The approval of a spot crypto ETF, particularly for Bitcoin, has been seen as this kind of holy grail moment for the industry for a long time.
Maybe explain that ETF concept quickly for anyone not familiar.
Sure. Think about gold. If you want to invest in gold, you could buy physical bars, right? But then you've got to store them safely, insure them. It's a hassle.
Right. Keep it under the mattress? Probably not.
Exactly. Or you can buy a gold ETF that's basically just a share, like a stock. that represents ownership of gold held securely in a vault somewhere. Super easy to buy and sell to your regular brokerage account.
Okay, makes sense.
A Spot Bitcoin ETF aims to do the same thing for Bitcoin. It would let ordinary investors, through their financial advisors, maybe even grandparents who aren't crypto savvy, buy Bitcoin exposure really easily.
And the hope is that opens the floodgates for traditional money to come in.
Potentially trillions, analysts think. It would be huge for legitimizing Bitcoin as an asset class.
So the shutdown hits. What happens to all those ETF applications from the big Wall Street firms?
Instant deep freeze. Total stop. Nothing reviewed, no meetings, no emails answered on the substance. They just sat there. All progress halted.
And now that the government's reopened, the SEC staff are back.
They're pulling those applications off the metaphorical dusty shelf. Yeah. Restarting the review process. But like you said about backlogs, these things are complex. Losing 43 days, that's a real setback when these big firms are pushing hard. The door for an ETF, which was slammed shut, is now maybe creaking open again, but slowly.
Okay, so that's the SEC. What about the CFTC, the Commodity Futures Trading Commission? Their role is also pretty critical, right? Because of that whole debate.
The big debate. Is Bitcoin a security, like a stock, which puts it under the SEC?
Yeah.
Or is it a commodity, like oil or wheat, which means the CFTC regulates it?
And that distinction matters hugely, doesn't it?
Oh, massively. If it's mostly a security, you're looking at really strict rules, disclosures, could slow things down a lot.
Yeah.
If it's a commodity, there's a clearer, maybe more innovation-friendly path under existing futures regulations. Who leads the CFTC really shapes that direction.
And the shutdown affected that leadership.
Directly. It stopped the confirmation hearing for Mike Selick. He was President Trump's pick to lead the agency at the time. That hearing was actually scheduled for November 19th.
And boom, shutdown happens, hearing canceled.
Exactly. Pulled right off the calendar.
So with the reopening,
that confirmation hearing can now potentially go ahead. Getting a confirmed leader in place at the CFTC is crucial because they will set the tone for years on how the U.S. treats crypto. The shutdown basically delayed choosing the architect for crypto's regulatory future.
okay, SEC, CFTC, what about the third gatekeeper, the Treasury Department?
Right, Treasury. Their big focus in this area has been stablecoins. The digital dollars pegged one-to-one to currencies like the U.S. dollar.
These are super important as the bridge between traditional finance and crypto, aren't they, for moving money?
Absolutely crucial. They act like the high-speed rail, the settlement layer. Billions can move through them daily. Because they're so central to money movement, everyone kind of expects tight federal regulation is coming.
And Treasury was working on that.
They were. They just closed a public comment period, ran from early October to early November, on a proposed law specifically for stablecoins. The sources mentioned it was called the Genius Act.
The Genius Act, okay.
Yeah, it stood for Generate Essential New Infrastructure for Understanding Stablecoins. Bit of an acronym there.
Huh, okay. And the goal was?
Basically, to set up federal rules, maybe treat stablecoin issuers almost like special kinds of banks. It was a big proposal.
And they got feedback.
Thousands of responses, apparently, from companies, experts, the public. A huge amount of input. And then the shutdown hit.
Right when they should have been analyzing it all?
Precisely. The shutdown stopped the whole process of wading through those thousands of pages, figuring out what people thought, synthesizing it. None of that analysis could happen.
The timing is pretty incredible, isn't it? Comment period closes, government closes.
Exactly. The moment they should have shifted from collecting input to actually drafting policy, the lights went out. So now, with the reopening, that analysis can finally resume. It means those foundational rules for stablecoins, a really critical piece of the puzzle, are taking another step towards becoming actual law.
Okay, so let's recap. We've got the SEC restarting work on Bitcoin ETFs, the CFTC potentially getting leadership to define its role, Treasury digging back into stablecoin rules, lots of crucial regulatory wheels starting to turn again.
Right. All cylinders firing up again, essentially.
Logically, you'd think the crypto market, which generally likes regulatory clarity or at least progress, would react positively, right? Maybe even explode a bit?
You would think so. But the big surprise, according to our sources, was how calm the market stayed. Bitcoin's price, mostly flat. Barely a ripple in response to all this regulatory machinery restarting.
Which is weird. So why the quiet reaction? What do the sources suggest?
They point to basically three main explanations. First, the classic market reason. maybe he was already priced in.
Meaning smart investors already anticipated the reopening and made their move.
Exactly. The news wasn't really news by the time it was official. The anticipation might have already been factored into the price.
Okay, that makes sense. What else?
Second, there's the philosophical argument, the decentralization mindset.
Ah, the idea that Bitcoin doesn't care about governments.
Sort of.
Yeah.
A chunk of investors genuinely believes that crypto is fundamentally separate from and designed to be independent of any central government or bank. So for them, whether Washington is open or closed, it's kind of irrelevant in the long run. Bitcoin just keeps doing its thing.
So government drama is just noise to that group.
Pretty much.
Oh.
And the third reason is maybe the most pragmatic one.
Okay.
Investors might just be waiting for actual results, not just process. They don't just want to hear that staff are back at their desks. They want to see the actual ETF approval letter or the stablecoin bill getting passed.
Ah, so they're waiting for concrete actions, not just the restarting of paperwork, policy outcomes, not just political headlines.
Exactly. They need to see the tangible progress before they react significantly.
You know, that feels like a sign of market maturity, maybe. I remember in the past, even small regulatory news, like a reopening, could cause huge price swings.
That's a good point. The fact that the market was relatively stable this time could suggest it's becoming a bit more sophisticated, less reactive to every little headline, and more focused on fundamental developments.
So pulling it all together, what's the big takeaway for someone listening?
I think the main thing is that this 43-day shutdown really acted like a giant pause button. It showed just how tied even global financial tech is to, frankly, domestic politics in the US. It clearly slowed down progress on really critical rules of the game ETFs, stablecoins, who's in charge at the CFTC.
And lifting that pause means that whole process, writing the rules, building the bridges between traditional finance and digital assets, is now speeding up again. The agencies are tackling those backlogs, hearings are getting scheduled, analysis is happening.
Right, the engine is restarting.
And it's a stark reminder, isn't it? Even if you're just watching crypto price charts day to day, you absolutely have to pay attention to these bigger macro factors, these political decisions. Who knew a fight over healthcare funding could put the brakes on Bitcoin ETF approvals? It shows no industry is really an island.
Absolutely. So we've seen this regulatory process restart. These agencies, SEC, CFTC, Treasury, are working to bring digital assets more formally into the established financial system. And that leaves us with a final thought, maybe something for you to mull over.
Okay, let's hear it.
Should this increasing connection, this growing government regulation, should we see it as a positive sign? You know, market maturity, institutional acceptance. Or does it fundamentally clash with that original free, decentralized spirit of crypto that drew so many people in the first place? Is it a good thing? Or is it undermining the core idea? Something to think about.